Welcome to Virtual Office Hours, Filing Taxes While in Law School, sponsored by the American Bar Association and AccessLex. The Virtual Office Hours series connects you with experts to help you thrive as law students and prepare for life after law school. We're excited to have Ashley Norwood-Struppa with us today to talk about this timely topic and to answer your questions. Ashley is Northeast Regional Manager at the AccessLex Center for Education and Financial Capability. She is a student loan guru trying to break the chains of student debt to help students achieve their education and career goals. She has been a student loan educator since 26 in financial aid counseling, compliance, policy, and advocacy. Ashley, we'll turn things over to you now.
Thanks, Tracy, and thanks everyone for joining me today. First things first, I just want to read my little legal disclaimer I have to do due to my lawyers. The information provided in Mass by AccessLex events and other resources is being made available to assist you in developing your personal financial strategy. It's not intended as investment, tax, or legal advice. You should consider whether the information is appropriate for your needs and where applicable, seek advice from an appropriate professional advisor. And so with that behind us, I'm just going to go through a few slides to give you some highlights about filing your taxes while in school and trying to maximize your benefits. And then I'll open it up to questions. So first thing is, I like to say that there are three things that you need to think about while you're in law school when it comes to filing your taxes. And you want to think about how to minimize your tax liability. You want to utilize tax benefits, and you want to know where to get help. And I'm going to sound like a broken record today because I'm going to say it many times that you might need to speak with a tax professional. And I'm not looking to make you spend extra money, but at times, even just using a tax professional to prepare your taxes for 1 year while you're in law school or right after you leave law school might end up saving you more money in the long run. So let's just jump right into it. So we want to talk about minimizing your tax liability. And I think that's extremely important. The less you pay in taxes, the more you can put towards your financial goals. And what I mean by that is to do what you want to do with your money. So Tom Wheelwright is a specialist in tax and wealth building strategy, and he is adamant that taxes are your biggest expense. Luckily, you can develop strategies to lower that expense through tax deferring and tax sheltering. First, you can do so through pre-tax strategy. You can easily reduce your taxable income each year by increasing your maximizing how much you put toward your retirement accounts, your contributions to a 401k, a 403b, or an individual retirement account, you might know as an IRA. These are removed from your gross pay, which is how much you get paid before all of your deductions and before your taxes are deducted. So you'll be saving for your future. Your withdrawals will be taxed during retirement, hopefully at a lower rate than your current income tax rate, because you'll be making less money then. This is known as tax deferring. You're pushing your tax burden off until later, so you don't have to pay it right now. You can do this through flexible savings accounts or health savings accounts too. These can be used for health-related expenses, tax-free. You can also take advantage of commuter benefits. Many of us probably aren't commuting right now due to COVID, but when we get back to real life and back to normalcy, commuter benefits might be a way, as well as dependent care deductions for those of us who have children. There are limits to how much you can deduct pre-tax annually, but together these amounts help lower the income you pay on taxes, lowering how much you have to pay overall. The other tax strategy is post-tax strategy. Like 401ks, Roth IRAs are designed to save for retirement, but with money that was already taxed. When you withdraw your money in retirement, you don't have to pay taxes on it. This doesn't lower how much you pay in taxes today, but it does in the future, and this is known as tax sheltering. Similarly, for those who have children, you can save for their college education through a 529 plan or a Coverdell Education Savings Plan, which is funded with money that was already taxed. So it's your net pay. The withdrawals are not taxed as long as they're used for eligible expenses, and the growth in these investments grow tax-free. Now let's transition to common student tax benefits, because tax time should be about finding ways to limit the income tax you owe, not about paying more. Knowing the common tax benefits that can help you is key. And this chart helps outline the common tax benefits that law students can receive. And we have this actually on our Max website. And I'm just going to throw this in the chat panel real quick. This is the link to our program Max. And Max is a personal finance program, and we have lots of resources on there. You can sign up for your Max account. It's completely free, and we have this resource available on there for you. All right, so tax credits are amounts you can subtract from your taxes owed dollar for dollar. The lifetime learning credit will allow you to claim up to $2,000 per year for any college tuition, fees, books, supplies, and equipment that were required, and you can get that money back dollar for dollar. Tax deductions lower your income subjected to tax and reduces how much you pay in taxes. The tuition and fees deduction allows you to subtract $4,000 or up to $4,000 from your gross income for money spent on eligible higher education expenses, such as tuition, fees, and books. You'll have to choose between the lifetime learning credit and this deduction. You can't use both in one year, so you want to see which one qualifies you for the most money. For recent grads, the student loan interest deduction is for up to $2,500 from your gross income for the amount you paid in interest on qualifying student loans. For those of you who were in the working force after, let's say, undergrad or a previous degree and have gone back to law school, you may have been paying student loan payments last year, or at least January through March of last year. You might be able to take this deduction as well. I encourage you to work with a tax professional at least once to help you determine your best strategies when filing your taxes. And other strategies help maximize that money that comes into your pocket and keep it away from taxes. Include charitable giving. Keep track of your charitable giving. The tax break you receive from it might even encourage you to give a little bit more. Business owners, if you have a business or maybe you have a side business, have a lot of different deductions they can claim, but many people are reluctant to take advantage of these for fear of being audited. If you're legitimately entitled to a deduction, you should never be afraid to claim it. Just make sure you know the IRS rules and can prove you're in compliance. You need receipts. Keep those receipts and documentation for 7 years, just in case the IRS has any questions. If you're a homeowner, you may be able to deduct mortgage interest as well as property taxes that you pay up to the maximum amount each year. If you purchased a home in the previous year, you might be able to deduct all of the interest paid on mortgages up to $750,000. And interest on home equity loans or lines of credit may also be deductible if you use those funds to acquire or improve your home. So there's lots of ifs, ands, or buts in these kind of deductions and credits, but you might be able to find some money. And are you not a tax professional? Because I'm not either. I'm working on my master's in accounting to get my CPA, but I'm not an actual CPA as of yet. But that doesn't mean I'm on my own or you are on your own. There's help available to you. It might be beneficial, again, for you to work with an accountant at least 1 year, maybe your first year in law school, maybe that first year out of law school, just to maximize your benefits and help you strategize how to lower your tax liability in the future. And there are a couple different programs you might be able to take advantage of. For personal tax strategy, a free option is volunteer income tax assistance, or VITA. If your income falls below an eligible threshold, you can find information at the IRS website, irs.gov. And if you want to work with a certified accountant, the Society of Certified Public Accountants has a list of CPAs for each state to help you with tax preparation, business formation, and tax strategy. To find one that's available in your state, you can go to aicpa.org. I'll put that in the chat panel too, because I know that Sometimes those acronyms can get a little confusing, AICPA.org. And you can try to find a certified professional accountant near you. All right, so I'm just going to quickly recap how lowering your taxes can be easy as 1, 2, 3. Minimizing your tax liability with tax deferring and tax sheltering strategies. Utilizing common student tax benefits that lower your tax income by factoring in your higher education costs, charitable giving, and business deductions are just a few. And then finally, know where to get help. VITA is a free service and you can find a CPA that's near you. I also have a blog post, the tax benefits law school students need to know about. If you want to go back and review the highlights from this brief session, it's on the Max website, which I already put in the chat panel for you. And one thing that I really recommend, I'm an accredited financial counselor, as everyone else on the Max team, and there are 12 of us. If you go to our site, you'll find Max Coaching. You can sign up for a free personal finance coaching appointment at any time. And you can, there's no limit on how many that you can attend or how long you can attend, sign up for them for. So please consider doing that. Like I said, there's 12 of us on the team and we're here to help you, whether it's talking about taxes to student loan repayment. And again, here is our website, accesslex.org/maxonline. So please register and you'll be able to have access to all of our resources. And that wraps up my slides. So Tracy, do you want to share any questions?
Sure. We've received a number of questions.
Okay.
I'm going to read through them here. The first one, are there special considerations for those that had an income prior to starting law school?
Okay. So your tax rate is going to be dependent upon how much you made in the previous year, and the deductions you can take may be less than future years due to income caps based on how much you made. So it's really going to come down to how much you can deduct and what the amount of the credits that you can take are going to be based on how much you made last year.
Okay, great. We have another question here. What if I worked remotely in 2 states this year in addition to attending law school?
So for federal taxes, nothing should change. For your state tax returns, it'll usually be based on where you worked and earned income, but it would be smart to check with a tax professional just to be sure.
Okay, great. Another question that we have, do I have to include work study income?
So work study income is taxable income, unfortunately, and should be included in your taxable wages and adjusted gross income. If you made less than $12,400, you don't need to file your taxes.
Okay, great. Another question we have here, how do we file our taxes if both spouses are students?
If both spouses are students. So you're going to file, you have the choice of filing jointly or separately. Filing jointly will give you the highest exemption. So for a individual filer, the exemption, which it basically cuts out that amount of income from your taxable wages, is, I'm drawing a blank, it's $12,000 and change. So it's around $12,000. And for those who are filing jointly, it's around $24,000. So it's more beneficial for individuals to file jointly, but when it comes to student loan, when it comes to the tuition and fees deduction, you have to file jointly to take advantage of it. So the tuition and fees deduction it has a maximum of $4,000. If you make less than $160,000, you'd be eligible for at least a portion of it. If you file individually, you can't then take $4,000 each. You couldn't get an $8,000 deduction. I think that's all I can think of.
Okay, thank you. We have another filing question.
Okay.
How do I file my taxes if I'm recently divorced?
So that typically, again, this is where I say talk to a tax professional. I'm previously divorced and I had to work with my attorney to decide how I wanted to file. Typically, in the year that you were divorced, you have the choice of filing either jointly together or separately. So if you got divorced in 2020, typically you'll have the choice of filing either way, whichever one is most beneficial for you. Or if you can't stand talking to that person, then try to file separately. But I would say, especially in the case of a divorce or a recent divorce, talk to a tax professional to help maximize the benefits that you receive. If there's alimony in there, that's going to be taxable. Child support typically is not, if there's any child support involved. But there's a lot of moving parts. So I would say, at least for this 1 year, talk to a tax professional and evaluate what your best options are.
Okay, thank you. We have a question here about where should they file their taxes? The state that they currently live in or where they receive unemployment benefits?
Okay. So now again, I know I sound like a broken record. You should talk to a tax professional. I would recommend it. Now, typically, when it comes to which state you file your taxes, it's going to be where you worked and where you earned money. So if you weren't working because you were on unemployment, it would typically be from the state that you received the unemployment benefits from. In many cases, so if this is your first year of law school and let's say you've been there only since August, typically that would not set up residency in that state. Typically, every state's a little bit different on what will qualify you for residency for these kind of purposes. So I would check with, and a question like that is probably a quick question to I'm not plugging anyone, but like an H&R Block or that local accountant in your area.
Okay, thank you. We have a question about scholarships. Are they taxable income?
So scholarships are not generally taxable income. The only instance I can think of where they are is if they are for more than the cost of attendance for your school, which is pretty rare.
Okay, good. I think you addressed this, but someone is asking if they have no income, do they still have to file?
You don't have to. If you were under 65, you don't have to file taxes if you make less than $12,400. If you file separately, it's $24,800. You may want to file, I'm sorry, I said separately. I meant married filing jointly. You may want to file your taxes anyway to take advantage of the lifetime learning credit. But again, you might want to talk to a tax professional to evaluate that, because the lifetime learning credit can provide you with some money, might be able to provide you with a tax refund even though you weren't working.
Okay, thank you. There is a question about the possibility of being a dependent. How do student loans and living at home factor into this?
Can you ask that again, please?
Sure, I think it's like how student loans for tuition and living at home might factor into the possibility of being a dependent.
So the dependent situation is up to, I'm assuming it's with like mom and or dad. And I apologize if that's incorrect. If this person's here right now or listening, set up a coaching appointment with one of us and we can go through your specific situation. But your dependency situation is going to be dependent upon how you, and again, I'm using the assumption that it's your parents, are supporting you. So you can be a law school student and your parents might still provide you support and they might still file with you as a dependent so that they can claim they can claim more on their tax return for you. If you're fully supporting yourself, it might be more beneficial for you to file, single for yourself so that you can get those tax benefits. What you cannot do is be claimed as a dependent and file as a single as you're on your own and use an exemption for yourself. So you want to make sure that whatever the decision is that you and your assumed parents are making, that you're all on board with it. Hopefully that kind of answers the question, but it's going to really depend on the situation. And I'm sure as a law school student, you hear it depends all the time. Set up an appointment. We can kind of chat about it.
Great. Looks like we have about 2 more questions, unless additional questions come in the next couple minutes. So the first question is, how do we list a stimulus check on our tax return?
So the stimulus payments are not considered taxable income for 2020 and 2021, depending on, I think I got the second stimulus payment actually in 2021. Right now, they are not considered taxable income. So you do not need to list them. You're not going to get any kind of 1099 form or any kind of income form to report it.
Okay, great. We have a question regarding what is the best strategy for approaching student loan repayment?
It depends. We get that question a lot, and that's what's great about Max coaching, and we can dig into what your personal situation is. I will typically say to someone, depends on where you are in your law school career. Are you in your 3L year, nearing graduation? And what are your goals for your for repayment? Are you trying to accelerate your payment so you can pay it off quickly? Or are you trying to make room in your budget, pay as little as possible each month, and you're okay with extending your repayment out, which means you'll pay more over time? So it's really going to depend on what your goal is and what your financial situation is and what your family dynamic is at that time.
Okay, great. Well, I think those are all the questions that we have. There was many themes throughout the presentation, like questions that came in on similar themes. So I think you did address all of them. So I think that, unless anyone has any other questions, we're going to wrap it up. So we want to thank everyone for joining us today, and a special thank you to Ashley and AccessLex. We hope that you join us for upcoming virtual office hours programming, and we hope that you visit adaforlawstudents.com for the full lineup. Also, be sure to check out ambar.org/debt for the 2020 Student Loan Debt Survey Report, which examines the issues at the heart of the student loan crisis and offers recommendations. So thank you everyone for joining us, and Ashley, thank you again.
Thank you.